What if you needed to buy your dream house before selling your current one? Sounds stressful, right? Well, this is where something called a bridge loan steps in. It's not as complicated as it sounds, but it's definitely a tool that people overlook, probably because it has a loan in its name, and who loves hearing that? Let's break it down. Imagine this scenario. You have found the perfect home. It's everything you wanted: big windows, a quiet neighborhood, and the kitchen you have always dreamed of. But there's one catch. You haven't sold your current house yet. Most people would think, well, I can't move forward until I sell. But here's where the bridge loan comes in like a superhero. A bridge loan, as the name suggests, is a financial tool designed to bridge the gap between two transactions, specifically the sale of your old house and the purchase of the new one. It's like a short-term loan that helps you cover the cost of buying a new property while you wait for your current property to sell. Think of it like having a safety net so as you can make that big leap without worrying about what's behind you. But hold on, why not just wait? Why even take out this loan in the first place? Well, the housing market can be tricky. Sometimes that dream house pops up at a time when you aren't quite ready. Maybe the market is hot and the houses are selling fast. Waiting could mean losing out. A bridge loan helps you grab that opportunity right now, giving you a little breathing room to sell your current home later without feeling rushed or missing out on a great deal. Now let's get into how it works. Bridge loans are typically short terms, think 6 to 12 months, and they usually come with higher interest rates compared to a traditional mortgage. That's because they are temporary. The idea is to pay off the loan as soon as you sell your current home. But don't let that scare you. Yes, the interest rates are higher, but remember, it's a short-term solution. You are not stuck paying it for 30 years like a regular mortgage. It's kind of like renting money for a little while until you can get things settled. Here's the cool part. There are generally two types of bridge loans. The first kind pays off the mortgage on your existing home, and the second type, well, just adds on top of it. If you have ever played with the building blocks as a kid, think of this like stacking loans. You have got your current mortgage sitting on the bottom and the bridge loan gets stacked on top. Yes, you are juggling two loans, but only for a short time. That all sounds great, but like anything involving money, there are pros and cons. One of the biggest advantage is that flexibility. You can move forward without the stress of waiting to sell your old home. You also won't feel pressured to accept a lower offer just to get your current house sold. But, and there is always a but, there are risks too. What if your old home takes longer to sell than expected? What if the market shifts and you are stuck with two properties for a longer than you planned? There is another layer to this too. Bridge loans are usually only available to the people with good credit and significant equity in their current home. So if you are not in a strong financial position, this might not be the best option for you. It's one of those tools that work best when everything is aligned, like a financial sweet spot. But here's where the things gets interesting. More and more people are using bridge loans today, especially in competitive markets. Cities like New York, Los Angeles, and San Francisco, where properties move quickly and prices are high, are seeing a spike in bridge loans. Real estate agents love them because they allow their clients to act fast, and buyers love them because they don't have to pass up on their dream home while waiting for their current house to sell. It's like a financial shortcut in a fast-paced world. And here is a fun fact. Bridge loans aren't just used for homes. Businesses also use them all the time. Companies might take a bridge loan while they are waiting for the long-term financing to come through or when they need quick cash for expansion. It's the same idea, bridging the gap between now and later, but in a corporate setting. Now, I bet you are wondering, is a bridge loan right for me? Well, it depends. Are you in a fast-moving housing market? Do you have an equity in your home? Can you comfortably juggle two loans for a short period? If the answer is yes, then it might just be the perfect solution. But if you are someone who prefers more predictability, there are other options to explore, like contingencies in your home buying contract or even renting for a while. Here is the takeaway. A bridge loan isn't for everyone, but when used right, it can be a powerful tool. It's like having a financial bridge when you are in a tight spot, helping you move forward without looking back. So the next time you find yourself in that tricky in-between phases of selling one home and buying another, just remember the bridge loan could be the lifeline you need. What would you do? Would you take the risk to get your dream home now, or would you wait for the things to fall into place? Leave a comment below and let us know your thoughts. And if you found this breakdown helpful, don't forget to hit that subscribe button and ring the bell for more insights on navigating the world of real estate and finance.